Okay, ladies and gentlemen, we'd like to call to order the meeting of the Rutherford County Benefits and Insurance Committee. And we don't actually have a quorum, but we've been advised that we don't actually all we do is make recommendations, so we're not making any final decisions, so we're just going to go ahead with the meeting anyway. And maybe one more will show up here. But in any event, we must proceed. So we have a copy of the minutes of the last meeting. Have you reviewed those, and do we have a motion? Motion to approve. Ms. Hickerson and Ms. Barnes with a second. Anyone have any corrections or additions? If not, all of you in favor, please say aye. Aye. Any opposed? All right, thank you. That carried. All right, Mrs. Street, we will start with the financial reports.
Okay, we'll begin with Fund 264. For the month of March, we ended for a per employee per month basis of $970.27 compared to prior year of $1,135.35. Our current year-to-date average is $885.84 compared to prior year of $884.70. Combining the on-site medical clinic, our experience for our total per employee per month increases to $1,003.63 compared to prior year of $1,173.65 for a year-to-date average of $919.07 compared to $919.79. In Fund 266, our year-to-date is $484,702 compared to prior year of $1,327,146.
Okay, that's the report for March period. Does anyone have any questions or additions or comments? Anyway, that's a good report again, it appears. So let's now talk about workers' comp and OJI, and Mr. Good will tell us about those statistics.
Good afternoon. I'd like to report for the month of March that we had a total of 14 injuries requiring medical attention. That brings us up to a total of 48 for the calendar year. Of those 48, 29 were OSHA recordable, with 13 being restricted days, 10 lost days, and 6 all others. The next page, if you look at your graph there, you'll see where it's comparing this year to the 2 previous years. This year we had 48. In 2014 at this time we had 55. And the year prior to that, 2013, we had a total of 52. The 14 injuries that we had in the month of March, the total dollars incurred was just over $12,000. Of those injuries, 5 of them were with the Board of Education, and the total dollars incurred there was $3,350. We had 1 in the Highway Department, incurred dollars at $2,750, and the remaining injuries were with the County General, which were 8. And the total dollars incurred there were $6,000. Next page of your report, you'll be able to see that where those broke out within the county with the Sheriff's Department, Ambulance Service, Pauls, and the Property Assessor. The last page of your report, you're looking at are the total dollars for the incurred for the year to date. In 2013, we had 85,000 at this time, 2014, 78, and presently at this year, we're at 115,000. I remind you that's basically because of the month of February with all the ice and the injuries as a result of the ice. Those claims are still open, and some of those may actually come in and those dollars reduced as the claims closed. Are there any questions?
Okay, Mr. Good, that's a good report. And then if there are no questions, thank you very much.
Thank you very much.
Now, Ms. Perrion, give us an update on how well we are doing here.
good afternoon. I'd like to give you the wellness report for March. For our Wellness on Wheels, we went to 6 schools and 5 county general departments. This is a combo of myself, Patricia Cox, and Amy Summerlin from Cigna. We saw a total of 138 people in March one-on-one contact with the employees, and the 683 number is the total population in all of the schools. The attendance is broken out individually across the top. So overall, we met with about 1 in 5 staff one-on-one. The spring training was our first quarter group programming. We had 170 participants. I'm sorry, I've got a little typo on there. It says 163, actually 170 people. Spring training was a group activity with a baseball theme where you had a team captain and got teams, and the teams could score runs by choosing different batting strategies. And you could get single, doubles, or triples, get home runs. And you did this by healthy behaviors. You could take a healthy snack to work one day, meditate, change your smoke detector batteries. There were lots of options. We've got the results on the back of the report if you would like to look there. We started off with 188 employees that registered, and 170 of them completed it. So we had a really high completion rate of 90%. 18,173 healthy behaviors were logged by these 170 employees over the 4-week period. The Diamond Divas of Oakland Middle School and Central Office's Team B tied for the most runs scored, and they got bragging rights, and they got a picnic blanket to take out to the ball field. And the MTSU tickets went to Rockville Elementary's team. They won the random drawing. We have the survey listed underneath that, and we had a 9-question survey just to ask them for some feedback if they felt like that this program helped their health habits. 88% of respondents said yes. 72% expect that their health habits will continue after the program. The most common answer we got of what was liked least was the manual tracking. And that's, different. So maybe our population is changing a little bit, because we've had a lot of people say that they want manual tracking, that they don't want online. However, that was the most common answer. They wished that they had online tracking and they didn't want to put on paper. So we'll take these feedback and use it on our next program. I also listed some comments down below that some of the employees put. I loved the first one. I put it first. It made me choose new healthy behaviors, and I tried to do one every day. I also really liked it. Forced me to pay attention to what I do. So it just brought some accountability and some awareness to your everyday behavior. The March individual one-on-one coaching had 8 new patients and 17 follow-ups. So there was a total of 25 coaching visits for March. That's with Ms. Patricia through the MedPoint Clinic. Current and upcoming activities are WOWs for May. The theme is UV protection. The Rutherford County Farmers Market is opening May 8th. Mobile mammography bus is coming to Stewart's Creek on Monday the 11th and Blackman at Tuesday, May 12th, and we still have appointments open morning and afternoon. So the mobile mammography bus comes to you, and it takes about 15 minutes for screening. You can only have one a year and have to be 40 or older. There's some criteria to meet, but you can call the insurance department and we can see if you meet that if you want to schedule an appointment. The Life Services webinar is Sign on the Dotted Line Estate Planning, and it is on the 19th of May at 11 or at 1. Anybody have any questions?
Ms. Perrin, can I ask you a question? Last Thursday night at the commissioners meeting, Commissioner P commented about the participation and utilization of the MedPoint clinics. Could you talk just a little bit about how you promote the MedPoint Clinic and its services at these Wellness on Wheels events that you first spoke about today?
Sure, absolutely. We go to 2 or 3 Wellness on Wheels each week, and we section off to every school and every county general department. We set up a table and have a promo flyer that we send out a couple weeks in advance to tell everybody that we'll be there. We take a water bottle, a snack. We take the flyers of the current wellness program that we're doing, like the spring training, for example. We also carry the MedPoint clinic brochures and the MedPoint magnets. We do blood pressure screenings. The DermaScan machine is used, and we have a little prize drawing, a goodie bag that people can sign up to win, whoever stops by the table. So when anybody comes to the table, they can do, they can also get body fat percentage measured, as well as your body mass index, and you can do any or all of these screenings. You can kind of pick and choose, because some people don't want to do the body fat percentage, but they do want to look in the DermaScan. So whatever we can use to draw them into the table. We go there. The first question that we do is say, hey, how are you doing? Are you on county insurance? And the second question is handing them a consent form, ask them to sign it, and say, do you go to the MedPoint clinic? We're going to take your blood pressure. This is for health info only. We're not diagnosing today. And that their blood pressure and all their numbers will be added in their MedPoint chart, and we ask them if they go to the MedPoint clinics, if they've had any experiences with the MedPoint clinics. A lot of people come back and say, yes, I go to Blackman, I love it there, I always go here. Some people say, yeah, I go to all of the clinics. We also get negative feedback and say, well, I went one time and this happened, XYZ. But this one-on-one contact that we have is really beneficial to healing anything that has gone wrong. We have been in a lot of situations where we can kind of talk the people through and say, hey, we have new clinic management. We want you to come back in and give us another try. So we also just get on the brochures that we hand out, there's services listed, and a lot of people don't know all of the services that are available at the MedPoint clinic. So a common comment we get back is, well, I didn't know you did all of this. So there are some people that think that it's just merely for a walk-in clinic. We also explain to them about if there is pharmacy available in the clinic that they need, that it is of no cost to the employee. So just do some education on that way.
So it is a good educational time, and your participation is at 20%, and we'd like to see that as high as we can. So we appreciate y'all going out to the schools and the different county locations and doing these services.
Okay, any other questions for Mrs. Perrion? All right, thank you for that very good, complete report. Okay, next we're going to talk about renewal of property and casualty insurance, and we will let Ms. Janet Bowman from CCMSI come forward and tell us about that.
Afternoon. You should have a packet in front of you that's pretty colorful for the renewal. Looks similar to this. Okay, the very first page is just going over your exposures compared to last year. So if you look in the first column, you'll see the property in the first section. We break it out between the county building and contents and the schools. You will see the expiring exposures in the second column there. So for the county building values, $169,793,401 versus the renewal at $171,601,056. So for a difference of $1.8 million or 1%. You'll see the contents values at the $10,429,130 for the county. The renewal at $10,556,582 for a difference of $127,452 or 1%. Then the school building values at $844,959,042. The renewal at $863,810,162 for a difference of $18,851,120 or 2%. The contents values for the schools is the same for expiring as it is for the renewal at $82,249,398. The next section brings you into the miscellaneous or inland marine schedules or equipment. The very first one is the vehicles, specific amounts of insurance. Last year it was included per schedule. This year we itemized it out at $3,239,397. Miscellaneous equipment last year is $13,958,016. It's kind of broken out a little bit different and included in the contractor's equipment at $10 million. The musical instruments at the schools, $2,262,919 was the expiring. The renewal is $2,381,397, a difference of $118,478. Because the schedules were broken out a little bit different, you'll see there kind of highlighted in the pink the difference of the overall inland marine between the miscellaneous equipment, contractors' equipment, and vehicles is $718,619 less than the prior year. You'll see also the emergency equipment, fire and rescue, and ambulance below at the $1,403,148. So highlighted there in the yellow, you'll see the total expiring, and then the renewal numbers, and then the difference of $21,589,234, or a 2% increase as it relates to the property. The next section is your casualty. It's highlighted there in the purple. So we're comparing the vehicles. The number of vehicles on the expiring was 687 county-owned vehicles. The renewal is 730, a difference of 43 or 6%. Total insured values for auto physical damage at $23,803,857 expiring. The renewal is $26,682,65, or a difference of $2,876,408 or 11%. The general operating budget difference of $19,569,240 or 5%. Also, we broke out the crime, public officials, and educators' legal liability, the exposures, how they're rated. Both of those categories are rated on number of employees and number of students. You'll see actually it's showing 80 less as far as the number of employees, and then the number of students down around 608. Okay, the second page is actually breaking out, the very first section is breaking out your property. Your property is currently Travelers Insurance Company is your insurance carrier. That is the same carrier that's being quoted this renewal. You'll see in the yellow your retention is $100,000. You'll see the rate there in the green for the expiring is 0.0396. That's per 100 of the value of the buildings that you currently have. Right now there you'll see in the green the expiring limit is $1,123,651,905. Your expiring premium for your property was $445,439. Your renewal total insured values for your building and contents is $1,145,241,140. They're quoting the exact same rate as they were expiring, so you're just looking at the exposure increase. So the exposure the renewal premium is $453,997. You'll see right below that, you'll see exposure increase was 2%. Your premium increase is 2%. There's no difference in the rate. Okay, and then also the inland marine is listed below. Those limits are quoted identical to your expiring limits. Okay. The next page goes into your casualty coverages. You'll see underneath the casualty, there's the general liability, the law enforcement liability, public officials, employment practices liability, your educators' legal liability, your auto liability and physical damage, sexual abuse, sexual harassment, and your crime coverage. Brit Global was your expiring insurance carrier. That's also who is quoting the renewal. Your expiring limits and your renewal limits are identical. Your retentions are the same as well. You'll see the difference in the expiring premium was $628,040. Your renewal premium is $650,000. You'll see right there at the bottom the optional quote for the terrorism. Last year, and traditionally, you have not purchased that for the general liability exposure. You do, however, have it included in your property, which would cover the actual property that the county owns. So I just want to make sure I clarify that. The optional quote for the TRIA is listed there in the bottom right corner at $5,266. You'll see the exposure increase was 5%. The premium increase was only 4%, so actually there is a reduction of 1% in the overall premium versus exposure. The next section is the Rutherford County Government Auxiliary Officers. This covers the Sheriff's Department for the auxiliary officers that they have that are not full-time or paid employees. And I know this is a lot of information. Basically, Plan 1 is what has been historically in place since 2011. Those limits that are quoted are identical to what is currently in place. If you look at the second page, Plan 1 provides the renewal premium of $5,965. The expiring premium was $5,681, just a little bit, maybe $200 difference in premium there. The next section is the Rutherford County Government Firefighter, so similar to what we were talking about with the auxiliary police officers. This is for the firefighters, for the volunteers. If you look at right under the section that says Class 1, it's giving you the definition of who is covered, all volunteer classes of membership included, but not limited to volunteer members, emergency volunteers, auxiliary members, and it goes on to tell you who are the covered folks under that. Basically on this, Plan 1 was also taken. This is quoted identical to expiring as far as the limits. And if you look at page 2, the Plan 1 premium, renewal premium is $3,819. That was the expiring premium as well, and so there's no change there.
Bowman, just for the benefit of the committee, could you walk through how you derive at the exposures you walked through on page 1?
Sure. The property, with respect to the property, though that information is provided to us by the consultant for the county, which is Employee Security Planning. So we get that information and then we send that information off to underwriters. With respects to the vehicles, I obtain that information from Ms. Street's department, which I believe she obtains from the different departments within the county and schools. And then as far as the number of employees, we typically either obtain that from the insurance department or from a census. And then the same thing with the number of students. We either Google that from the internet or that information is provided from the risk management department or from someone else within the county or school system.
Just a little bit further with that, I mean, some of us sort of, our number of employees are down. I mean, do we think that's a real number? Mr. Sandvik and Ms. Nolan, somehow they don't think that we have decreased the number of employees. So is there any rationale for that, Ms. Bowman, that we might be missing? Or does it make any real difference is it a material difference that we have reflected a decrease and it may not really be a decrease?
Right, that's possible. I mean, it does fluctuate a little bit, each year. But like I said, we're typically pulling that information either from the internet or from the risk management department. So it's not you'll see the 2% difference there as far as the decrease in overall premium.
So normally what happens is Ms. Bowman will send a list of underwriting questions, and I will send them out. So as an example, this year I sent some to Mr. Russell over at the Sheriff's Office. I sent some to Mr. Sandvik for completion, and then I will forward the responses on to Ms. Bowman, and she'll compile from that.
It may be that we are not precisely accurate here, Ms. Bowman, so will that put us at any risk? I mean, we clearly have not had a reduction of 600 students in our school system, so are we putting ourselves at risk with at some point somebody saying you didn't tell us the whole story?
Yeah, no, absolutely not. The policy is a non-auditable policy, so once coverage is bound and coverage is put into place, the premium is the premium. It's not going to fluctuate.
So whoever's quoting this is at risk and not us, right?
That's correct.
Right. Now, there may be, you've done a remarkable job taking us through this, so there may be a few questions that some of us have already forgotten by now, but I want to give them an opportunity. Ms. Street, you have some more?
I did. I just want to, for clarification purposes of the committee, the property insurance, which is on page 2, it has the exposure increase and the premium increase of 2%, but the actual per unit cost has not increased overall. Is that correct, Ms. Bowen?
That is correct. 'Cause
Okay,
your rate
and
is
then on the casualty insurance, if they are looking to compare that to prior year, we would have taken the exposure increase, premium increase, but not the optional quote for TRIA. Okay,
So does the 650,000 include the TRIA or not?
It does not. The TRIA is quoted as an option.
correct,
Additional 5,200 on top of the 650.
right.
And this exposure increase, I mean, that's really, you can't see that on this paper. How do you determine what that is? So
That's
that, we
that-
went from 628 to 650. Okay, so I have to go back to the first page, is that?
Correct.
Correct.
Yes.
So what we do, Mayor, is we will actually, from inventory control, get a list of all of our property that we have. It also provides us with a list of all the vehicles that we have, and we will provide that to Ms. Bowman so that she can send that to the underwriter for exposure review.
So the increase in the number of vehicles, the increase in our operating budget, all of that totals up to a 5% of exposure increase. Is that
That's
what this
correct,
is?
yes. If you take the casualty that's there highlighted in the purple and then the blue right there with those exposures, if you take that, that's what we're coming up with the exposure increase of the 5%, and then the premium increase was 4%, so offset by 1% less.
So if we continue on then, for the Provident products for both the auxiliary officers and the volunteer firefighters, Plan 1 is what we have had for the past several years, correct?
Correct, uh-huh.
Okay.
And if we look at Plan 2, we can see like a half a dozen things that have been added that, increases the premium about $300. So every one of those things that have now been included in Plan 2 would appear to be something that, might be of some real benefit. So how should we review whether we should move up a notch to Plan 2 or not?
So the purpose of, just to give you a background, a couple years ago in conversation with Captain Spence over at the Sheriff's Office, and I believe Mr. Gammon, and in speaking with Chief Farley, I began asking questions about our volunteers and became concerned that we would not provide income replacement for them in the event that they were injured in the line of duty on behalf of Rutherford County as a volunteer. So we went out to market. We found these particular products so we could fill that financial gap for those individuals, primarily with the purpose of replacing income for them and not requiring them to carry their own individual disability policy, which could potentially exclude any volunteer services from payment. So we wanted to close that financial gap. If we add these additional services, then we are further closing that gap in the event that one of these volunteers are injured and now they have a continual disability type situation where a spouse would need to return to work. In doing that, would need the education. Their child may need additional services in order for them to be able to have the spouse go back into work. And so from what I can see, and Ms. Bone, you can tell, those would be the additional services that we would pick up with the $300.
That's correct for Plan 2. And then Plan 3 is just, notice it's also including the same coverages as Plan 2, but then it's providing higher limits.
Okay, so, it appears to me more than reasonable that we at least move up to Plan 2. But anyway, that's something for you out there to help us decide.
Right. The life insurance that we offer our active employees would cover for things such as the spousal education benefit. So that would Plan 2 would put it more in line with what we offer our current active employees as well.
All right, so you may have other questions, but we have property and casualty, which does include this additional insurance for our auxiliary officers. So we want to take all of this, I guess, as one motion potentially. If someone is in a position to craft a motion. Ms. Hickerson? Okay.
But to the plans for the auxiliary and the volunteer firemen, the volunteer firemen, is that all of the different volunteer departments, if you will, in Rutherford County, or just the ones that fall, Anvil's mine, and they don't fall under the big group, but it would do Anvil also and Walter Hill also because they're still pulled out and not under the Rutherford County that kind of took in Salem Blackman and some other ones.
It would be the ones that are directly under Chief Farley's jurisdiction only. So Almaville would not be one of those because although they are supported by the county, they are not actually considered a county volunteer fire department under Chief Farley.
Okay, Ms. Harvey?
Just a question. On the premiums, it says that it's a one-year rate guarantee. So would we be making a motion to carry this just for 1 year, and we would come back to review it at the end of the year? Or is this something we're going to carry for 3 years or more?
The policy, the way it's quoted, it would run from 7/1 to 7/1 for your fiscal year.
And that's typical for us because our exposures change year over year, so that causes us to have to revisit it each year just to make sure that we have adequate coverage for our exposure.
Other questions? All right, Ms. Hickerson?
I'll go ahead and make a motion to approve, for making it simple, everything that Ms. Bowen has presented us with the renewals as is, continuing with the same companies, to also continue to omit the quote of terrorism risk, so we don't want that option, and then open to Plan 2 on both the auxiliary officers and the volunteer firefighters.
Okay, now we need a second. Mr. Gammon? Now, other questions or discussion? Okay, then, we're ready to vote. All of us in favor of that, please say aye. Aye. Any opposed? All right, Ms. Bowman, that was, again, a very good report and a good outcome with nominal increases. Thank you. Now we're ready to talk about some of these voluntary products, and we're going, which includes flexible spending and COBRA and volunteer products, and we're going to let Mr. Jay Brown cover those three items for us, please.
All right, the first thing we'll cover is the flexible spending account. You should have a rate sheet or a bid results proposal for that. A little bit more. Can you hear me? Is that better? We sent an RFP working with the risk department earlier this month, and we ended up getting, as you can see on there, 5 proposals back, and then the insurance administrators, Ms. Street and Cowan, met with the 2 finalists earlier this week on Tuesday. And for specifically the flexible spending account, we've had some service concerns with the current vendor, which is Task. They did not send out a bid for this, so we did narrow it down to the first 2 vendors on the left side, ADP and WageWorks. And so we brought them in on Tuesday for a finalist kind of presentation, and the recommendation of the insurance administrators and Ms. Street and myself, after going through the proposals for the flexible spending account between ADP and WageWorks, was to move from Task over to WageWorks. Some of the reasons, their presentation was a little bit better, we thought, than ADP. The references they provided, some of their flexible spending account clients in the area. They do work with City of Franklin, for example, and City of Knoxville. Their online capabilities and some of their apps that they use on some of their smartphones seem to be a little better than the others. So when we looked at this, between ADP and WageWorks, as you can see, typically there's a per employee per month fee, as you see across from all the vendors. There are currently about 850 employees, members on the FSA. So when we looked at that cost, WageWorks was a little bit higher. However, ADP had an initial setup charge of $325. And so we rolled it all together at the bottom. As you can see, ADP total annual cost is around $27,865. WageWorks was about $7,800 more at $35,700. But the decision, essentially today with Task, we pay around $5 per employee per month. So either option's cheaper than what we pay today. And then also Cowan pays this fee on your behalf. So really what we were trying to accomplish out of this is make sure that we select a vendor that we feel is going to provide you better service than you have today. And so after the presentation, the decision was really to move to WageWorks, to a little bit higher than ADP, but cheaper than what you're paying today. And based on the references and the presentation, we feel that they will provide a better service to you and to the employees than what you have today. And this, to one question that was asked on the last one, these are 5-year rates that are provided. So for WageWorks, it would be $3.50 guaranteed over the course of 5 years.
And City of Murfreesboro went to WageWorks January 1. Is that correct? Is that what they had shared with us as well?
All right, so do we want to take these individually, or, because I noticed that under the COBRA bid results that we have the same people that are being considered, so, and I don't know if the recommendation is going to be the same or not.
The bid was released as an FSA and COBRA, so we probably would want to take those two together and then do the voluntary benefits separately. That would be my recommendation, Mayor.
Then let's listen then to the COBRA bid results, and then maybe we can discuss then how we want to go forward with those two combined.
All right, we went through a very similar process for selecting the COBRA vendor, and the reason we sent this one out is kind of the same thing. We've had poor service with Infinisource. You've actually had them for plus 5 years. We ended up, honestly, selecting the final two vendors that we had for the flexible spending account, being ADP and WageWorks, to come in to look as their COBRA administrator. Very similar results also on the presentation and even the cost. When you kind of look down through here, ADP and WageWorks were the two we brought in of the 5 selections that sent in proposals. ADP did have a $9,900 initial setup fee, where WageWorks did not have that charge. Some other things, if you go down through there, there's a monthly fee per COBRA eligible employee. So that's really probably the largest part of the cost, where ADP has 40 cents per eligible employee, and we're basing that on, if you look at the assumptions below, almost 5,500 employees or 5,498 employees, whereas WageWorks had a 60 cents per eligible employee there. Another thing we looked at were the mailings. When we send out annual enrollment mailers, ADP charged around $25 per mailer, whereas WageWorks was $17. And so at the bottom, we kind of rolled everything up again. The difference being that just that COBRA eligible employee fee was around $26,390 for ADP and $39,000 for WageWorks. But when you factor in the difference in the mailings and then the $9,900 fee that ADP had in this first year for their setup, the cost difference between the two was around $2,700, $2,767. But once again, based on the poor service that we're having today with Infinisource, we felt WageWorks would do a better job of kind of correcting some of those issues, and felt the additional $2,700 was worth making the change to WageWorks versus ADP at the end. So the recommendation from the administrators in Cowan, after hearing both presentations, were to pick the FSA and the COBRA with WageWorks, and then also feeling that combining those services with one vendor may help with some of our administrative issues as well.
So one other number that's not reflected on the sheet there is that, such as with the first year, ADP charges $9,900 for initial setup. They had a fee, and correct me, Mr. Brown, it's $325 or $350, $325 for each year thereafter. So when you look at, because it is a 3-year contract with 1-year right of renewal, so a 5-year total, we start adding the 325 for the remaining years that they had quoted that. And then you look at our internal costs for managing 2 separate vendors, and what that would take from a staff perspective, that the dollars actually close in. And so that the 2,000 plus that you see in differential now actually becomes smaller when you begin to factor in those additional fees. And we just felt like that the insurance administrators played a big part in reviewing these products and listening to their administrative concerns and burdens today. We felt like it would be best to consolidate the vendor.
Okay, you have some questions, Ms. Harvey?
When would this be taking effect?
They would be January 1, 2016 contract dates.
Okay, so if you are currently doing a flex spending and we have tasks, we still have money left over. We can carry, I believe it's $500.
Correct.
So if we wanted to use that money, would that money be transferred to the new company, or would we still have to go through tasks?
So typically what occurs is you would have a run-out phase with the current vendor to where they would actually process claims up to a certain date, and then you would have a period of time to where claims would not process, and that money would roll over to the new vendor, and they would begin processing all claims from that point forward. It's the same process we went through whenever we transitioned to task. It would be the same similar process.
That usually runs smoothly? Do we usually have any problems?
Smoothly is always a stretch when you talk about changing any vendor, you know, but it's doable. It doesn't come with a lot of frustration for lots of employees. There's a hiccup here or there, but we can typically work through it because these type of vendors are used to those arrangements.
Okay, so you've, Mr. Sandvig.
Okay. In looking at the two, though, the $9,900 fee with ADP is a one time over the 3-year life.
Correct.
So even though ADP has a $320 or $325 after that first year, there's still about a $9,600 difference.
It would become less than that when you factor in the staffing cost to manage the multiple vendors, because then you have 2 different feeds going to 2 different vendors and those type of additional savings that we would realize by having the one feed, one vendor.
Confident in your internal costs.
Yes. Yeah.
I mean, another thing we were looking is we may change the process where we may have to send out more packets this year and in future years enrollment packets. So we only assumed 66 packets being sent out, where that number could go up to a couple hundred if we change our process. And so with ADP, it's $25. With WageWorks, it's $17. So if we do raise that in one conversation, it may have been as more as 500 packets, then that's going to offset a lot of that cost too.
Right. Ms. Hickerson.
Oh, Ms. Hickerson, excuse me.
Question on, what are we currently, how does the ADP or WageWorks on the COBRA look compared to what we are like right now with Benesource?
With Infinisource, they're 60 cents per COBRA eligible employee as well. So there wouldn't be a setup fee since it's your current, but they're actually, maybe we should have said that too earlier, is they're more in line with the WageWorks cost today. So you're not really paying more than you are paying today. You're just not getting the savings by going to ADP if we would have made that choice.
If there's not any more questions, I'll make the motion to accept the recommendation of WageWorks for both the FSA and the COBRA.
Have a second? Mr. Sandvig and Mr. Gammon. Other discussions, other questions? If there are none, then, all of you in favor of that motion, then please say aye. Aye. Are there any opposed? All right, thank you. So now then we move forward to the Well, let's see, the voluntary products, are we next on that? That's next, the voluntary products.
All right, and this one has a few more rates. You're more accustomed when I come up to have more rates than the last two. So this one's probably more accustomed to what you're used to seeing from me with a lot of numbers on a sheet of paper, but I didn't bring the big sheets this time. But on this one, we did send out the voluntary benefits. The reason they're out to bid is our contracts expired with Allstate today, so we've gone through the 3 years with the 2 one-year extensions. So we had to send this one out to bid this year. And so when we sent it out to bid, we had 2 vendors we selected to come back in our finalist presentations on Tuesday. We narrowed that down to your current voluntary benefits carrier, which is Allstate, and then Unum was the alternative. And so when we looked through the proposals, we met with them just like we did the FSA and COBRA administrators on Tuesday. They both had very good presentations, so that wasn't really a differentiator as far as the actual presentation. But when we really looked into the proposal, really what we noticed is 2 things. One, on this sheet here is the rate that the employees are paying for the products versus Allstate and Unum. And then the second thing was the plan design, the richness of the benefits that they're receiving. And so on this proposal here, really we looked at it, 3 different products that are offered. So with Allstate, we're offering an accident product, a cancer product, and a critical illness, which is listed on the left-hand side. If you see the current pricing for the accidents listed there under the current rate, it's a 4-tier rate, so employee plus spouse, child, and family. Allstate offered a high and a low option this year for us to consider, as did Unum. And so when we look at this, you can kind of see from an employee's perspective between Allstate and Unum, Unum's a little higher for employee, a little lower for spouse and child, and the family's a touch higher. Same thing with the high rates. The difference is the benefits that were offered under your current plan, under the accident policy versus Unum, was quite a bit better. So even though the rates, I would say the rates were about the same for the accident policy, the benefit was much richer under Unum. Similarly, with the cancer product today, you can see your current cancer, we have 2-tier rates. For the low option, you have a $12 employee-only rate and a $20.60 family rate. We asked both of the carriers to quote it on a 4-tier rate to kind of match the accident and also our medical and dental and some of the other products. And when you look there, essentially Allstate is a little bit lower in most of the tiers under the cancer policy. But really what Unum wanted to recommend in kind of these bottom numbers here is really combining the cancer and the critical illness together. And we're seeing a lot of the carriers wanting to do that. And essentially the reason behind that, for you guys that don't know what a critical illness policy is, essentially if you purchase a critical illness policy and you have a heart attack or a stroke, some major illnesses, a lot of time your employees are purchasing these products that may have the HRA medical product or the higher deductibles because you're going to find yourself in the hospital, potentially meeting your deductible, possibly out of work for a period of time. These benefits under the critical illness pays employees either a flat $10,000 or a $20,000 policy. They sent directly to them. What Unum says is that we want to lump in the cancer along with that. So today your current cancer policy would pay out if you're diagnosed with cancer, you receive $1,000. If you have to get dialysis, or if you have to go in for hospitalization, you'll get $200 a day. Under the Unum policy, they want to include that as part of critical illness. So as if you're diagnosed with cancer, you would either, depending on which plan you selected, you'd get a $10,000 benefit or a $20,000 benefit. And so the same committee, the insurance administrators, Ms. Street and ourselves, when we looked at this, we liked the concept Unum was proposing of offering the accident policy and the critical illness, which included the cancer rider, as an option to kind of simplify it a little bit more and possibly give employees more of a benefit. And really those rates are listed towards the very bottom. And so then what we compared is, you can see critical illness, $10,000 coverage. It's the second time we list that. And then there's non-tobacco and tobacco rates by tier. And so for Allstate, what we ended up doing there to kind of make it apples to apples is we included the current critical illness rates that the employees pay today, along with the low plan cancer benefit above. so that their plan would include a cancer rate as well. And then we compared that to what Unum proposed as their critical illness with cancer rider. And if you kind of go down through there, essentially, employees would be able to get a critical illness policy with the cancer rider under Unum, and all the way up to age 49 and below, it's cheaper for the employee under Unum versus Allstate. And then if you look over into the spouse tier, it's very similar there. Under the family rate, it's cheaper as well. So really what we saw under this is that Unum, even under the critical illness and cancer, offers a richer benefit. And for your employees below 50, they're going to get a reduced rate. So with these products, as we haven't said, but the employees pay the full cost of the products today. So when they go through annual enrollment, they would have to select, do they want the accident critical illness policy, but they pay the full cost of that. So they would receive the full savings or the additional cost if they're over 50 for those benefits.
One of the things, too, that was attractive, and I know Ms. Dodd was in that meeting as well, is under the Allstate plan, there's buckets. So anything heart-related for which there's coverage, you may have 3 diagnoses in that one bucket. In the Unum plan, each individual diagnosis has its own payout. So whereas with Allstate, you may end up in the same bucket twice, but you're only going to get one payout. So you have this situation occur, and you get your payout, and then all of a sudden you have another diagnosis situation occur, but you've already had the payout inside of that group, so therefore they won't pay. Whereas with Unum, you could have a heart attack and they would pay, and then if you have a stroke, they're going to pay again. So they don't categorize like with the Allstate. So the opinion was, given the close cost, that the benefit is so much richer inside of the Unum plan for the employee, that it would be better served. The other thing that Unum talked about too is that they have the ability in their platform to actually look and see all your coverages that you have. So it's one call in, they can see what all coverage you've purchased through them and initiate claims based on the coverage level that you have, rather than having a situation where you have to call into different customer service numbers in order to activate claims within the organization.
Right, some of you have questions here, I'm pretty sure. So Ms. Harvey, we'll let you go first.
What about pre-existing conditions? Is there a time, or like if you're already diagnosed with, say, heart disease, are they going to cover that because you're already diagnosed with that? Or if you've already had cancer, are they going to cover that because you're already diagnosed with that when you go onto the policy?
So they talk specifically about the heart attack scenario. There is a 12-month pre-existing clause in the plan, and
So if you currently have the Allstate
Right.
product today and you're past the 12th, so the Allstate product has a 12-month pre-existing condition. So if you've purchased it 5 years ago and we offered it, you're past that 12-month period and you'd be covered. If you move from the Allstate product over to the Unum product, then you would waive the pre-existing condition limitation. So it would be just like you have today. If
Aren't
Right.
taking it when it
the benefit of moving to the Unum product is they are going to provide, as the new vendor, a guarantee issue. So everybody is eligible for the Unum product. A lot of times with the existing vendor, you would have to go through medical questions and you may be denied coverage. So the good part of this is with Unum, you would be allowed to come on the plan if you had a pre-existing condition. You would just have to wait 12 months before the benefit would be eligible. So as long as you got through the first 12 months without something happening, it would pay out as normal.
And their guaranteed issue is actually beyond first year as well. Is
It's
that
every-
correct?
yeah,
It's
any
every year.
Every
so,
year, people
which is a
can come
bonus.
on.
But to answer your question, Ms. Harvey, in a little bit more detail, he did speak specifically to the heart attack situation. And even though you may have a contributing factor to the heart attack, such as uncontrolled high blood pressure, as an example, and then you ultimately have a heart attack, the uncontrolled high blood pressure would not exclude the benefit from paying on the heart attack. It it would go ahead and pay out. He talked about that one specifically.
So it's not a negative, I guess, there's no real negative move from Allstate to Unum in that scenario. And then another thing that kind of helped the insurance committee when we worked through this is that if employees want to keep their current Allstate product, then they're able to do that. Unlike the medical or the dental, once we terminate the master contract with Allstate, employees are able to reach out to them directly and set up a direct bill. It won't be deducted from their paycheck, but if they said, I'm 55 or 60 and it looks like this may cost me more, then they can continue with Allstate on a direct bill basis instead of moving over to the Unum policy if they choose to do so.
Dickerson.
Okay, in looking at these numbers down at the bottom where we've got the cancer rider included and even Allstate and Unum, you have it broke down on age brackets. Will these premiums increase as you age out of each tier, or if I took it and I'm 25 years old, I'm going to have the 25-year-old rate the entire 5 years or ever how long, even though I'm going to age out of that bracket? Or are we going to see an increase each time we go from the 30 to 39 to 40 to 49? How does that work, please?
The good thing about these products is whatever age you come into, that's where you stay. So that is unlike the supplemental life insurance where you go up every 5 years, this does stay the same.
So buy young, right?
Okay, more questions. I'm sure those of you that are participating in these things know a lot more about it than I do. So.
And, we looked at, if you heard the commission meeting on Thursday night, the average age of our employee is 43, so you can look to see what the rates look like for our average employee and see that they are, cheaper through the Unum proposal as well.
Let me, as a novice, ask a little bit of a summary reflection here. If I just look up at the top for accident and cancer rates for both Allstate and Unum, they're pretty much in the neighborhood, with Unum maybe being a bit lower, sort of on the average, okay? If I come down to the bottom, it's not nearly as clear to me which one of these programs is, if I just look out at family coverage, Allstate, under that critical illness, non-tobacco, and tobacco is substantially less than Unum. What am I missing here?
Well, if you look at the bottom, at the bottom kind of section between the tobacco and non-tobacco, the family rate under age 35 for Allstate's $33.70, and under 30 it's $15.20. And then because the age brackets are a little different, the next one's 30 to 39 for Unum, so it's $23.20 versus the 33. So still, even in that family category, up until you get into your 40s and 50s, does that number kind of say where Allstate's lower?
So I guess what I was missing under Allstate, the first middle section there is for critical illness only. When I come to the bottom, it's critical illness plus cancer.
Right.
So
The Unum has
apples to apples, I have to come all the way to the bottom section.
That's right. That's right.
That's the comparative area there. And again, down there, yes, through the age brackets up to 59, basically, Unum is a little lower in cost, and then it switches over to higher from 60 and up.
And then also with Unum, the child is included with the employee rate. So if the employee only selects coverage, their child is automatically included at the employee rate. Whereas over at Allstate, you can see for the 18 to 35, it's $17.88 for employee, $23.96 to have the employee child. That rate would only be $7.60 for the employee plus the child. So it's kind of confusing with all the numbers, but that is another advantage, is that essentially the child is covered with the employee under the Unum.
And on the Unum plan under the child, they've added a couple of additional conditions as well. So as an example, Down syndrome is a specific child critical illness category that would pay out under the included rider on that particular product.
Okay, Mr. Sandvig, you're usually a pretty knowledgeable person about all these things. You have any questions?
Ready to make a motion to approve Unum since our employees who have the Allstate can continue it, because there would be some disadvantage for some of us who are out of that 40, 50 range. I'm not claiming old yet.
Okay.
But I would like to make a motion to approve the Unum proposal.
All right, do we have a second? Ms. Hickerson. Now further questions? Okay, then I think we're ready to vote. All of you in favor of that motion, please say aye. Aye. Any opposed? Okay, thank you very much. Now, Business Street, let's talk about our safety consultant results.
I'm gonna, if you go to the back page, this will be the page that you'll probably want to see. I've provided you with a copy of the responses to the RFP that we submitted for the safety consultant. As you know, the safety consultant bid was released to vet out outsourcing the on-site inspections that we currently do for all of our schools and county locations. We expanded the actual number of sites through the bid process to include some of the auxiliary locations at the schools. As an example, concession stands that may be located on ball fields and things like that. We will do a sampling of our solid waste sites under this contract, the actual convenience centers, as well as the numerous ambulance locations that we have. And we received the 4 bids in front of you, and you can see on the last page that there was a wide swing in the cost, beginning with CCMSI at $34,000. Practical Solutions Consulting was the next cheapest bid at $45,600, going to FDR at $77,300, and Fisher Arnold out of Memphis at $189,500. We requested a 3-year contract on this. We have actually used CCMSI for a select group of locations to help us during this transition period of not having a full-time person on staff, and until the decision was made to actually continue outsourcing or replacing internally. CCMSI has done a good job for us. We have seen a tremendous response from the individuals in the county whose locations we have visited. They have worked very well with us. They have gone around during the site tours. There's something to be said about outsourcing this in terms of the heightened awareness that it drives. You know, much like when we see other county people walk in, we've seen them 1,000 times before, but there's something psychological about when you outsource it. And so in reviewing the product of the work and what their bid came back in at, CCMSI is their recommendation for outsourcing our safety consulting annual inspections that we perform with an annual contract of $34,000.
Okay. I'm sure all of you are seeing these reports, and they're flying through, visiting any number of our departments and buildings already. So what's the wishes of the committee?
This contract would begin January 1, 2016, just for January 1, 2016. We've conducted all of our annual visits to date. We've concluded those within the past school year, and so this contract would begin January 1. When we did it internally, we would try to spread it out throughout the course of the year to, you know, for our purposes primarily internally. Contracting this out, however, we would do a more condensed period of time, and so all inspections would occur in the spring months at all of the locations.
And by contracting this out, actually our annual expenditures are going to be reduced.
Correct.
From our current in-house costs that we've been experiencing.
That is correct.
All right, what's the wishes of the committee? Ms. Hickerson?
you said rate guaranteed 3 years? Okay, I'll make a motion, we go with CCMSI.
All right, second. Mr. Gammon, other questions or discussion? All of you then, please say aye if you're in favor of this. Aye. Any opposed? Thank you very much. That's unanimous. All right, is there any other business to come before the Benefits and Insurance Committee today? If there is no other business, then thank you very much for your participation, and we are adjourned.